Okay, hey everyone, we're about to get started here. I just wanted to give you some context, on what we're doing here, and um, this is kind of a culmination of ideas that I had with my team. My team is my son who does the marketing. But we we wanted to do something that would really give you value. Okay. And I'm gonna clear the air here. Just a disclaimer. I do have a trade alert service. Okay. And I do have a course that I sell. However, this is a free session. Okay. Free 4-day session, no strings attached. And my goal here is to give you as much information I possibly can based on what I know, to make you a better trader. Okay, and that's really the goal. No other, there's no other agenda. There's nothing behind this thing, because I really believe that if we give, right, and if we give everything, as much as we can, it comes back to us. All right. And so there's obviously no charge for this, and you're going to learn a lot. And based on my, many year history, of trading these things. Okay. All right. So the first thing we're going to cover is the agenda. All right. And again, this is the first time that I do this particular type of session, right? And hopefully it'll go well. And I do want to say also, if you want to see something, more than what we're presenting, put it in the comments, and I'm going to review that every day to make sure that we're meeting your needs in every possible way and supporting you in every possible way. Okay. All right. So with that, I'm going to talk about the agenda here. Challenge. First, we're going to talk about these challenge expectations. We're going to start with trader psychology, and the reason for that is because it is really probably the most important thing to have as a trader, aside from your trade plan. All right. And I rate that trader psychology first and trade plan second. All right. And that's why I'm putting it right at the beginning of the agenda, because it's really important. And a lot of traders get into trading without having that trader psychology and mindset to enter and place your trades and manage them. And what happens is it's an afterthought, and you always have to go back to this. All right. So we're going to start with this to make sure that you guys are on track. Okay. We're going to talk about the 7DTE breakdown, what it is basically, and we're gonna review the 7DTE trade plan as it is today. And I can tell you that there are already changes that I'm going to be making to that trade plan in the coming week or so, based on what I've learned in the past probably 3 months. All right. We're going to talk about entry, exit, and adjustment criteria. Okay. And then day 2, we'll talk about entering the trade, and we're going to actually be entering the trade. And yes, this session is recorded. Okay. We're going to actually be entering a trade tomorrow. Okay. So we're going to prepare today, and we're going to enter tomorrow, although today was probably a good day to enter, but that's okay. We're going to talk about when not to trade, technical analysis, common chart patterns that I use, and technical indicators that I use for trading. Okay. And it's very simple. Then we're going to talk about rolling a trade, and we're going to really, and I saved day 3 for that, because we're really going to get into that, because it's other than the trade plan and actually placing the trade, knowing how to manage the trade and being able to do so that you end up with a profit is very important. And so That's why I'm saving day 3 just for that. Okay, so we really get it nailed down. And then day 4, we're going to enter a second trade, and then and exiting the trade, and then the second review of rolling threatened trades. And I want to be able to answer all of your questions in that second session, because I know you're going to have them after we do assessments and that kind of thing. All right, and then conclusion and key takeaways are at the end. All right, any questions so far about this? Anything that you think that I missed in this? All right, okay. All right, and again, I may not catch your questions, but if you post them, I will certainly be able to go back and grab all the questions and address those on the next day. All right, so we don't want to miss that. All right, so what can you expect? Have a basic understanding of trader psychology, and this is what you can expect for today. Have a full understanding of the 7 DTE trade plan. You will know how to place, manage, close a 7 DTE trade, all right? And by managing, I mean how you will adjust or roll a trade in any market condition. And you will understand the technical analysis and indicators used to place and manage trades. I think that's really for the whole session, okay? I condensed it, and it really covers the whole section, all right? All right. So let's get into trader psychology. All right. So the first thing I'm going to talk about is emotional causation. And before I actually do that, you guys had prereqs going into this. And were you guys able to look at those? Go ahead and be honest. Just let me know real quick, okay? Because I'm going to put up some questions up here to challenge you a little bit on this. Anybody? No? Okay, that's fine. All right, no. All right. Okay. All right. So let me do this. And again, this is something new for me. All right. Okay. So let's talk about why you're here. All right. Let's do this first. Okay. So the first thing to talk about is why you're here. And I gave you 3 different reasons, and I've done this on pretty much every webinar, but it's a good place to start so that I understand what your needs are, right? Okay, great. Okay, learning new strategy, number 1. All right, perfect. Right? And then try different strategies. Great. Okay. Okay, awesome. Okay, we're at 13%. I can see it. 20%, and it's pretty much staying steady here. That's great. Okay. Alrighty. I probably had I should have asked a separate question, but that's okay. Maybe I'll put it in tomorrow. And that's it. That is, what is your experience trading these? Okay, awesome. All right, we'll keep that poll going. Go ahead and please answer those questions if you can. Awesome. All righty. Okay. So let's talk about emotional causation examples. So when I talk about causation, I'm talking about what your emotions do to you, right? What your emotions do to you as a trader and how to manage that, all right? Okay, too quick driving a truck. All right, awesome. All right, be careful there, guys. All right. Okay, so let's talk about that, all right? So let's talk about greed first. Greed is a killer. And what causes, what are the causes in greed? Trade bigger for faster gains. Tell me you haven't done that before, right? You want to get in there, you want to make that money, and you want to make it fast, because you know what? It is so easy to open an account and stick money in it and trade, right? So compare that to any business that you endeavor on. Let's say you want to go into real estate. What do? You read, you educate yourself, right? You do all those things that you think that you need to do to educate yourself, and then even work with someone maybe to get experience, right? What happens to traders? Man, they open their account, they jump in, they trade, and they get blasted. That's what happens, right? So anyway, that's something that you don't want to trade big, and we're going to talk about that, especially with a new strategy. You want to trade small, right? The other causation is trade more frequently for faster gains. So you want to overtrade. New traders tend to overtrade, right? Their positions. Not take profits to obtain bigger gains. So you have a nice gain, and this is something that I struggle with too, especially in futures. I don't take profits because I want bigger gains, all right? And that's something that I struggle with too. So you want to set your targets with your trading, right? And that's part of your trade plan. And you want to hit that target and move on. And even though the market screams up after you have that gain, right? It doesn't matter. You locked in a gain, and the goal here is consistency. That's really the goal, right? Right. And then the other part is wait to take losses, hoping that losses will turn into gains, right? And I know that there's some people in my group here that are probably thinking, man, that's what he did today. All right. Okay, so moving on here. All right, fear. Fear is the other part, right? What causes you? What are the causes? Take profits too early. So if and this fear actually happens a lot of times after you've had a big loss, all right? And so yeah, taking profits too early and not letting the thing evolve to get your main profits. Because if you take profits too early, if you stop out on other trades, right, you're never gonna have a winning scenario, all right? So you want to take profits based on your trade plan, and make sure that you're not getting out too early. Not taking a loss, hoping that the market will come back, right? And then the other part is regret, and this happens when you take a big loss, right? So when you take a big loss, right, negative thoughts due to previous big or multiple losses get in, and so this really messes with your mindset, all right? And I've taken off a year because of large losses, okay? And that's what it does to you, all right? And then your lack of confidence to get back in. So those are the three main ones, that you struggle with. And I can tell you that having a trade plan, trading small and trading often, not over trading, is the key to dominating these emotions. All right. All right. So how do we overcome this? I have some examples. Greed and fear. Trade very small until profitable 70% of the time, or whatever your criteria is, right? Establish a trade size based on account size. I can't tell you how important this is, because even if I take a big loss today, quote unquote, right, my account will not die. It will not, I'm not going to blow up my account, because my trade size is based on my account size. So and then I have some guidelines on that for credit spread traders that we'll get into later. All right. Review trade plan daily to ensure you are sticking to it. Okay. If you have it memorized, that's great. But if you're new to your trade plan and you made some adjustments, it's a good idea to keep it in front of you all the time. And that helps you as well to be honest with yourself. Okay. And in your trading. Okay. Regret and remorse. Walk away for a few days to clear your head. If you have a big loss, it's okay. It happens, right? And what you want to do is you want to clear your head and relax and just take some time, okay? Take some time. Establish a no quit attitude. You walk away, but don't ever quit. You always want to have a no quit attitude, because that's the only way you're going to make it in trading, right? And number 3, remind yourself that others have done it, and so can you, right? Other people have gone through this, and me included, right? Taking massive losses, right? That really affected me in my life. But I've been able to put it aside, you know, walk away from it, and then come back because my thought is that if I can make it in my career, and be successful, why can't I make it in trading? Okay, and that's the mindset that you need to have. No quit attitude. All right, so let's look at these. Quickly observe the habits of successful traders. That's really, really good. If you're associated with other traders, learn from them. Okay, in our group, we have tons of full-time traders in there, and they're posting their trades, and then we get a chance to ask questions and how they do it and everything like that, and then you learn, you gain experience from that. Commit yourself to having the right mindset, right? Everything that I talked about, you need to commit to. Define your morning routine, study the markets before trading, understand news events and how they're going to affect you, all right? Because that's really, really important to understand. And people say, oh, it's all technical, it's all technical. To a certain extent it is, but when there are, and a good example is, a Fed meeting, right? You don't know what's going to happen at when they announce interest rates. You have no idea, right? And especially not in the short term, maybe in the longer term, but understand and know those news events. And there's resources to be able to go to the website and by date you can see everything that's happening that day that's newsworthy for trading. All right, let's see here. Obviously, you want to be knowledgeable about your trading. So any trade plan or any trade that you endeavor to get into, you want to be knowledgeable about and gain experience. And the way that you gain experience is that you trade small, you trade often, and it gives you that rhythm, right? And you'll see those losses are if you're trading small, those losses are normal, right? And they don't affect you. And so that's why you want to do that, all right? Understand what your max loss is and max gain. That's really, really important for credit spreads, because credit spreads have a very, very large max loss, okay? And then understand your trading platform. That's really important too, because if you're moving from TD Ameritrade Think or Swim to E-Trade, right? Which I open an account in E-Trade. It's different. It's different. So before you actually put on those trades, even if you're very experienced already, make sure that you understand the tactical tactical processes that broker has so that you can do well. And then a good example of that is rolling a trade, right? If you have Think or Swim, it's really easy, right? It pops it up, it populates the trade for you, but if you're using international brokers, that's not the case at all. You have to manually enter that information in there, right? Okay. Alrighty. So imagine winning and imagine losing, right? So when I'm taking a stop loss, I prepare myself to take that stop loss. So I think about, okay, I'm gonna get out. No, this is part of my trade plan, and you do it, right? And then winning, you want to have a positive attitude, and that's the reason. Nick, the reason I'm looking at E-Trade is because we're forming a deal with these guys to bring us lower commissions. That's why I'm looking at E-Trade. All right, and then remind yourself that it's real money. All right, especially if you're paper trading, and starting your strategy. Make sure that you clearly understand that this is real money and it can go away very, very quickly. And I can tell you that it's very, very easy to make money, but it's very, very hard to keep it, right? And then at the end here, trade small and trade often. Okay. Any questions so far about all this stuff? Okay, awesome. All right, so now let's talk about the actual trade plan for 7DTE. And let me see my polls here. Let's see if I have another question. Okay, I'm going to close the poll. All right, thanks, guys. Just to give you the percentage here, 47% were interested in learning new strategies. You've seen, heard about, and read about others making money. You just haven't been able to do it yourself. That's 13%. And then the third one is you've tried different trading strategies that you thought, okay, this is it, only to discover that it's not working for you. Okay. All right. All right. So I'm going to close the poll here. All right. Now, let me see what else did I have here. Okay. All right. So these are some of the questions that I had for pre. So I'm gonna do these questions after we go through this. Okay. I'll give you a break. All right. Okay. So here we go. Okay. So number one, enter with small positions using multiple expirations, and that's something that I changed in my my trade plan in 2020, because what it allows you to do is spread out the wealth. Okay, so if you put on a trade today and then the market drops right in 2 days, then I will be providing an updated trade plan. If you put on that trade today and then 2 days from now the market drops, right, then you're not stuck with a big position. You can actually put on another trade with other expirations, and that's the reason for that. Okay, all right. Entry should be done when there's a relative increase in volatility, like today. Today there was a little pop in volatility, and today would have been a good day to put on, right? However, when volatility is high and moving lower, there's no problem putting on those trades, knowing that as the time goes by, right, the volatility is gonna drop. Okay. All right. Let's go on here. When I enter a trade, I usually use a delta of 10 to 12, especially when there's a lot of volatility, and then a little bit higher delta when there's when the volatility is a little lower. Okay. I did not enter a trade today. I have several on right now, and so I'm looking to close those today. All right. And then for bull spreads, which are call spreads, right? I use 7 to 10, and actually probably less than that. I usually do 6 to 8 for the bear spreads. And the reason for that is because the market is generally going up, right? It's not going down. So the general trend of the market is going up, and so you want to take advantage of that with bull spreads. And then call spreads, actually, when you put those on, and we'll see, tomorrow when we put these on, that the actual strikes are much closer to the market on a call spread than put spreads are to the market in a bull spread. Okay. And so you want to be cognizant of that, because markets do go down hard, like it did today. I mean, it went down pretty hard today. But when the market rips higher, you're more vulnerable to take losses with call spreads than you are with put spreads, just because of the distance factor of that and the ability to adjust those trades. Take profit. Acceptable 50 to 80% of credit received or greater if the market conditions are favorable. So most of the time I'll when I put on a trade, I will put it on and automatically set a closing order to 10 cents. Okay. And the trades that I put on are 10 wide. So in this case, let me see, my thing isn't working. Okay. So in this case, the 30 to 45 is typically 60 to 70 cents when I put on for 10 wide. Okay. Alrighty. Okay. All right. Okay, let's move on here. Okay, for positions that have been rolled or adjusted, profit target should be higher or actually lower, right? Relatively speaking. And you want to you do that because typically when you've adjusted a trade, it's at a higher delta because you don't want to, you're not gonna spend a lot of money to adjust that trade, and so typically you put it on at a higher delta. Okay. Okay, and then initiate rolls within 20 to 50 points of the threatened short strike. And so we haven't had really low volatility in a long time. And so what I try to do is I try to put it on 40 to 50 points away before the position gets breached. Okay. And then sometimes it gets breached, not too often, but now there's a way that I've figured out how to address breach trades as well. Okay. And we'll talk more about that tomorrow or on the third day. Okay, stop loss, and don't really take a stop loss on these, and the reason is because I adjust the trades, and so that's why there's a high win rate on these, because I'm able to adjust the trades, push them out, and let the market do its thing. All right, so this is the actual trade plan, okay, and again. Once I revise it, you guys are going to have full access to this trade plan. You can actually download the version right now in the Facebook group, but again, I'm going to be modifying this trade plan shortly. Okay, so my pre-market routine. I know that it might be really small to see, but in any case, I do look at the U.S. dollar because when the dollar goes down, typically it's favorable for SPX, okay, due to the cost of goods sold overseas. I reviewed Treasury notes. Treasury to the 10-year Treasury basically is a competes for dollars from the market, and so when you have Treasury rates moving higher, what happens is there's competition for those dollars to move from the stock market into treasuries, and so you got to be you want to be cognizant of treasury rates. Today they're at 1.47%, and they've actually moved down a little bit, even though the Fed has talked about tapering, so that's actually pretty good. If it stays that low, but we'll see. Okay, and then I look at futures direction too, where it's going, where the trend is, and like this morning as an example, today it was kind of down to flat. All right, and so the trend, the short-term trend at least, was moving down, and then the market took it further down when we had the open session. Okay, and then the VIX is really important. That's what gives you the level of volatility that there is. So I always have the VIX in front of me. Okay, and I'll show you my main charts that I use to trade in a few minutes here. But and then you can see all of the things that I look at on one screen to understand how best to trade. And then you want to make sure, especially for 0 DTE, we're not talking about 0 DTE, but you want to even when you're ready to place a trade, the best time to place a trade is typically in the morning, just because the volatility or implied volatility is the highest at that time. And so that's when that's really probably the best time to put on a credit spread trade at that time. Sometimes the market moves away against you, but that's okay. And sometimes it moves in your favor, and that's really great, actually. And yes, I will be I will be providing several examples of adjusting and moving trades for sure. Okay, we're going to spend a whole hour and more actually on that discussion. Okay. All right, and then I have my post-market routine, basically updating the trade journal. Basically, my trades come in automated from my account, and so I'm able to look at those continuously, on there. And I don't have a trade journal per se on that I use every day, just because my trade plan is pretty well developed, but I do write notes for what things I need to change in that trade plan when things happen. So it's kind of a pseudo trade plan. I mean a pseudo journal. Determine if rules were broken and why. Sometimes if the rules are not hard, but they're guideline type rules, you want to understand why you made that change, and make sure that you're good with that. And if you do that often and you win a lot, what happens is it creates complacency. You want to be careful with that. Determine if the risk you're taking is within acceptable range. In other words, let's say I put on a credit spread that's that's 70 cents, and then I say, well, I can put on I know that if I put on $1.20, this thing will work, just fine, and so you want to understand, when and why you make those decisions, and make sure they're solid. Okay. And then you want to make sure that your losses are within acceptable ranges, just like I talked about before, where you don't want to get out too early in a trade, because of fear, or hold it too long because of greed. Okay. And then determine if tweaks or adjustments are necessary in the trade plan. Okay. Alrighty. Any questions so far? Let me see. Morning. Okay. Yep. All right. Thanks, guys, for answering some of those questions. Appreciate it. Alrighty. So here's the description of the trade plan. Again, and basically we talked through that pretty much already, but here it's in this form so that you can get it, and then you'll be able to look at this when you see the replay and when you get the slides. Okay, this one here, this really goes through the trade management process. So tonight, what I'd ask you to do is walk through these slides, and make sure you really understand it. I mean, it's obviously I'm not going to obligate you to do this, but it's in your best interest if you really want to get the most value out of this session. Okay, and then ask me questions, and I'm going to save time to be able to answer all your questions. All right, I'll only go through it. All right, so let's move on here. Okay, and then this is an example of an adjustment, and I think I have it. Let me see. I think I have it today that we can go through. Okay, through that as a teaser for that adjustment. So here it explains it, and then I'll walk you through it. Okay. Let's see here. Yes. Okay. Here it is. So here is your first example of an adjustment for a 70 TE trade, and this I put on a long time ago, but I haven't changed the slide. I probably should, but in any case, you get the gist of what I'm talking about here. All right. So initially, I put on a 29.45, 29.40. This is a 5 wide spread that I put on, and I collected 45 cents. and then I sold to open a call spread for 40 cents. It was a 30, 35, 30, 40 call spread. Okay. Okay. Next, what happens was the market moved up. And so what I did was I rolled the call spread, right? And you can see I rolled it from 30.35 on the short strike to 30.55. So I moved it up 20 points on there. And then at the same time, and it cost me 35 cents. And then at the same time, I rolled the put spread from 29.45 up to 29.55 and collected 30 cents. So you can see there that there's a definite difference between the premium that you collect on the put side, right? Because I rolled it 20 points and it cost me 35 cents, and below I rolled it only 10 points and it cost me 30 cents, almost the same price. So that's the favorability of mostly putting on put spreads. Okay, and then what happened? The market stayed in that range, and I closed the call spread at 10 cents, and I closed the put spread for 10 cents. And so the total profit on that trade was I collected 85 cents at the beginning. I paid 5 cents to roll it, and I closed the trade for 60 cent profit on that. Okay. All right. So that is the material that I have for today. I'm going to see. Let me see. I'm going to put up a poll here. Let me see. Okay. One thing I didn't go over: the profitability factors. Okay. So I can't use that poll. I got to do that tomorrow. Okay, so we didn't get into the real meat of these positions, so we'll do that tomorrow. Okay, here we go. This is the one I just covered. All right, what is the delta that you should use to put credit spreads on? I love it. Okay. It's a put credit spread, remember. So, but that's okay. It was a trick question, so you're forgiven. Yeah, I mentioned 5 to 6 on call spreads, but this is for a put spread, for a put credit spread. Okay, awesome. You guys got it. Okay. All right. Okay. All right, I think we got most everyone in there. Okay. All right. Let's see here. Let's see if I can answer some questions here. Okay. I'm going to go back and I'm going to answer your questions. All right. I've been trying the strategy, but I guess I'm missing something, especially on rolling. Okay, well, we are going to talk about that. On that, we're definitely going to talk about that and go through that. Okay. A blueprint to a trade. What factors do you look for and how to place? Okay, we will talk about that too when we go on the placing of the trade. Right. I do actually have an example of how to build a trade plan. It's actually one of my YouTube videos, and I can get you that. I'll share that information with you. What is the line between trading often and over trading? Okay, so you'll have criteria on how to enter your trade. right? And if that criteria matches, then you should be fine, right? You're not over trading. You're trading by your trade plan. Now, if you're trying to make more money and squeezing in things, even if conditions aren't what you should have, then that's over trading. Okay, the session will be recorded. Okay, is this strategy acceptable for other stocks and indices? I'd say yes, because we do credit spreads on stocks. Just keep in mind that with stocks or ETFs, they actually can be they can be assigned. Okay, with SPX, there's no assignment. There's no assignment on it. All right. Okay. Even with the WD typically make the morning. Yes. Okay. I'm confused about SPX settled. Oh, okay. So let me talk a little bit about settlement. So there are weekly options and then there's monthly options, right? And so the weekly options settle and close at the end of the trading day every day that they're traded. Okay, the days that they're traded. So they close and settle at that particular time. When a weekly trade is put on and it doesn't settle that day, basically you can manage that trade. You can manage that trade. What do you call it? Until 4:15. Okay, that's when it closes on trades that don't expire on the same day. So with monthly options, what happens is that the trade will actually stop trading on on the third Thursday of every month, and so it stops trading at 4 p.m. on the third Thursday of every month. Then what happens is that futures take control, right? And it settles on Friday around 10:30 when all the SPX stocks open at that time. Okay, so that's basically what happens. All right. So you got to be careful with monthly trades because they can bite you. Yeah, there's costs. There's CBOE costs. Somebody told me that Schwab doesn't charge those. They charge like 1 cent or something. Not sure about that completely, but in any case, there's exchange fees and commissions to trade this. You can use this strategy on RUT and NDX as well. Those are the two other indexes that you can use it on. I think there may be other indexes. Yeah, you can use SPY on this, but remember that SPY settles in stock and not it's not cash settled. Okay. Right. Let me see. Okay. Recording the slides already. How do we balance our deltas at entry? So you can balance it by putting on call spreads and put spreads, right? Or you can actually buy. You can use debit spreads as well to manage equal delta. Links for this, the rest of the session you should be able to join with the same link for the rest of the sessions. I will be sending out the slides along with the replays of the videos. Why did I switch to 5 wide to 10 wide? I don't know. I felt you know, I felt more comfortable with that because I could get a little bit further away from the market, but that's not really true because the premium is higher. I don't know. I just changed to 10 wide. Feel more comfortable with them now. Besides support and resistance levels, do you take an account find direction to put versus? Yeah. I definitely. So late, you know, what I did recently, not too recently, but I put on calls and puts, you know, both sides, because we were entering the September timeframe, and that's when you know, I was using iron condors basically to trade. So I was doing that at that time. And then when are they settled? Okay, we talked about that. Does the volume affect the decision to trade puts or calls? No, because the volume is really good for SPX. And really, there's no problem with that, and so that's really not a problem. Okay. I read SPX and trade 24 hours around November 27th. How will this affect us? I'm not sure I understand that question. I read SPX will. Oh no, I don't think it'll affect. It really depends on the broker. From what I've heard, like international brokers, I think you can trade from 3 o'clock in the morning on, but you can't do that with Thinkorswim for some reason. So that doesn't work. I think when they do open it for 24/7, if you have a broker that does that, then you can trade it at those times. What time do you put on trades? I put them on really at all times, right? Some, like if I'm entering the day and I want to put on a trade, I'll try to put it on in the morning after the market settles a little bit. But you can put them on really at any time. I do trade 3 expirations for the most part. You know, sometimes it's not optimal to get in, and so I wait. But lately we've had pretty optimal conditions here. I do use SPX. I trade ES futures, but not options on futures. Okay. Well, I link each morning to join 15 minutes before the session? Yeah, I'll be opening 15 minutes before the session. Okay. All right. I think I covered most of the questions. What is waitlist? Oh, waitlist is we open our trade alert service 4 times a year, and then before those times we have waitlist for people to join the waitlist to get in, and it's a discounted rate, etc. So you should have seen that, I think, when you registered, probably. Yeah, I'm sorry, interactive brokers, not international brokers. Sorry about that. Yeah, thanks for correcting me there. Okay. You should talk to Schwab. I'm sure they have it. So I would advise you talking to the broker if you can't find the symbol. I don't trade 1DTE. Okay. All right, guys. I think that covers it for today. And you know, get ready, because we're going to have a lot more stuff going on here. Okay. Hopefully you can attend all the sessions. If you can't, it'll be recorded, and you don't want to miss those ones especially when we're adjusting trades, right? Okay, guys, thanks a lot for your time. Hopefully this was of value to you, and we will see you tomorrow.